Thank you for tuning in to another edition of the Vulcan Report. As you can see, the negative bot checks have taken total control as we are retracing back toward trendline support. The chart you're looking at right now is of the E-mini S&P 500, which tracks the S&P 500. After topping out back here, you see now we're beginning to pull back. You see major support coming in around these levels here. Once you get to like the 1173, back on down toward here around 1154, another one around 1146, and then when you get into the consolidation channel between 1135 and 11 even, there's major support within the consolidation cloud there. As long as the market can stay within this this consolidation cloud here and then manage to break back out above it, we should be setting up for the next monster rally toward new highs. This particular pullback phase could take another probably 1 to 2 weeks to complete. It's not good news if you're bullish, but that's just the way the market is right now. We are moving quickly toward the negative pulse wave support. Those of you who subscribe to the Black Ops Trading newsletter spreadsheet, you know exactly what I'm talking about here. So you've been well informed ahead of the herd. We informed you back up here when the market was trending, when those negative bots were taking place, and we told you to expect the fulfillment of those bots. You know that the pulse scan swing VIX leads the market 3 to 5 days out. So while others were here buying and getting stopped out, you were standing aside. All right. So the shorting has not really begun yet. It won't begin until we've taken out that negative pulse wave. So you're going to want to wait for confirmation that the negative pulse wave has been violated and that we have a possible trend change in the making. If that happens, then you Black Ops Trading guys know exactly what that means, and you know exactly what to do about it. For the rest of you, you have no idea what I'm talking about. But basically, what we look for is major turning points in the markets that we can take advantage of. So while others are fighting the trend or chasing the market, we're just sitting back and just picking them off one by one, slowly but surely. One note here of caution also to those of you who are all about, shorting or thinking that the rally that we saw was false or government manipulated or and induced, which all is true, of course, but you want to stick with the market. You want to stick with the trend. Just because a market is pulling back and people who have been long are taking profit, it doesn't mean the market has turned bearish. We have major support in this long, extended bullish phase cycle. So until it's exhausted, you don't want to be in here building up massive short positions just yet. When it does pop, it'll have a long way to go, and you'll be able to make a lot of money. But right now, all it's doing, until we get confirmation that it's broken the negative pulse wave, all it's doing is pulling back toward trendline support and setting the stage for the next monster rally that could take us well into next year. And I don't even know if it's going to have a stopping point, to be quite honest with you. Not with all the Fed pumping liquidity into the markets, into the system. Another thing that you're going to want to note too is the massive manipulation and selling pressure into gold and silver. Look at this gold here. You see gold hit a short-term top, pulled back, built a base here for the next leg up, which broke way through here, as you can see, and then topped out here, and now we're pulling back again and even gapping today down, headed quickly toward the consolidation cloud here. So, and it has a wide range. 1311 to 1260 is the range in this Kumo consolidation cloud. So it can remain in this cloud and just trade up and down in this range for a while. before choosing a direction. It may even break and test major trendline support at 11.95 in the gold. Now, again, those of you who follow the newsletter know that we've been telling you about the negative bot checks all along in gold and silver, the major short position building and things like that. For whatever reason, it's coming to fruition now, building support around these levels here. Again, this market is very bullish. It can withstand pulling back, violating the cloud, and going to 11.95 and still being considered to be a bull market in gold. So don't get it twisted, and be careful if you're going to try to short it. You want to keep your stops tight and take profit where you can, because gold is setting up for the next leg up, and it's going to be a beast, and I don't think it's going to stop this time. So if you missed this train, like you missed the prior trains, you're going to really wish you hadn't, because when it runs again, it's not going to stop for a long time. Gold and silver is going to do remarkable things because of the quantitative easing and the other things that are happening in the world. So you're going to really, really, really want to be careful and wait for the next buying opportunity, because you will have one, and it is going to be monstrous. So you can confirm this with the silver. If you look at this silver chart here, same thing. Again, we're heading quickly toward this this consolidation cloud. We're probably going to stop around 22 on the silver. I don't know if we're going to get within the 21 to 20 range in the consolidation cloud, or even test the trend line support at $19. I don't think we're going to get there. It's probably going to stop around 22, and before it pops up again. But make no mistake about it, gold and silver is nowhere near done yet. I think we're going to see some explosive moves to the upside in the metals. It's just how it is. We're standing aside for this pullback and waiting the long entries in the metals and in the stock indexes. If you can't wait and you need to do something, then you can buy some puts and set on those for a minute. But the best thing to do is to be patient and wait for your next entry point. So those of you who follow the report, remember to wait for your the swing VIX to tell you when to get in and get out, and hold your positions and use those recommended stop entries so that you don't get smoked. These markets, the volatility can pick up on you without warning and blow you away. So hang in there and be encouraged. Last but not least, I do want to show you what's been happening in the bond market. Now, regardless of what they tell you, okay, in order to keep interest rates low, bond prices have to remain strong. Look at this collapse from October the 7th to where we are now. Look at this massive collapse. We're now trading well below par. Well below trend line support has now become trend line resistance, and we are now officially in a bear market in bonds. This is the TLT ticker symbol. This is the long bond. It tracks the 20 to 30 year bond. It is down, and it's down hard. It has been parabolically moving to the downside. They have also made it very difficult to trade in and out of this thing. The other day I tried to buy to buy shares, and I was told they couldn't locate shares for me to buy. Then I went and I tried to, I said, okay, well, fine. Let me go ahead and buy some puts. Told me I couldn't do that either. They couldn't find anything for me. So there's been a lot of lockout manipulation in the bonds that we know. But making it difficult to buy the bonds or to go short the bonds or even operate in the options market, that's problematic, because now you're interfering with the free market, and you don't want the free market to do what it's going to do. So I think they're allowing the bond prices to temporarily fall below this, so that when the government goes back and buys them up, they get to snatch them for cheap. Remember, they always run the market in the opposite direction that they want it to go, so that they could get in at advantageous prices to them. So if they want to rally a market, they break it down first so that they can buy in cheap. they want to destroy a market, they rally it up first so that they could crash it. It's just how it works. So I think they're operating severely in here. They're letting this thing fall down so they can buy it back up and prop it up. So I'd be careful in the near term shorting this, just because if you can even get in, the only opportunity you may have is probably trading in the bond futures. That's the only thing I can think of. I don't like the double and triples because they don't really follow the market. They don't track it very well. So I'd stay clear of those. You could try the 10-year futures. See how the 10-year note is moving. The futures a lot more smooth, a lot more sense in this one. Even the 30-year looks more like that TLT, but it has a little bit more sense to it. More ebb and flow, more up and down. So this would probably be a better thing to do, is to go in and maybe buy in here or something, because right now it's hugging that trend line right now. So it's looking like it could be setting up for a nice buy, at least to try to fill this gap. So we'll see. It's one of those that you have to really track and follow and see what happens. Anyway, that's all I have for now. So be encouraged, and remember to take what you can and give nothing back.